Investing can often feel like navigating a labyrinth, with countless paths to choose from, each promising a different outcome. In this complex world, the Vanguard S&P 500 Index Fund stands out as a beacon for those seeking a straightforward, effective strategy for long-term investing. Its appeal lies not just in its historical performance, but also in its simplicity. The notion of set it and forget it resonates deeply with many investors, especially those who may not have the time or expertise to actively manage their portfolios. By investing in an S&P 500 index fund like VFIAX or VOO, one gains exposure to a diverse array of companies spanning various sectors of the economy, all while enjoying the benefits of low fees. The endorsement of this investment approach by legendary investor Warren Buffett adds a layer of credibility that cannot be overlooked. Buffett's wisdom is often sought after, and his suggestion to allocate a significant portion of his wealth into an S&P 500 index fund for his heirs speaks volumes about the confidence he has in this strategy. It reflects a belief in the resilience of the American economy and the power of compounding returns over time. By consistently investing in the index fund, one can harness the effects of dollar-cost averaging, which mitigates the impact of market volatility. This disciplined approach allows investors to purchase more shares when prices are low and fewer when they are high, smoothing out the effects of market fluctuations over the long haul. However, while the S&P 500 Index Fund is indeed a robust option for passive investing, it is essential to consider individual financial goals and risk tolerance. Some investors may find that diversifying their portfolios with bonds or international stocks can help balance risk and enhance potential returns. Bonds, for instance, tend to be less volatile than stocks and can provide a steady stream of income, making them an attractive addition for those looking to cushion their investments against market downturns. On the other hand, international stocks can offer exposure to growth opportunities outside the U.S., which can be particularly beneficial in a globalized economy. Factor-based ETFs also present an intriguing avenue for those willing to delve a bit deeper into their investment strategy. These funds focus on specific characteristics such as value, momentum, or quality, aiming to outperform traditional market cap-weighted indices. By incorporating such ETFs, investors can align their portfolios more closely with their personal beliefs about market performance and economic trends. However, this approach requires a more hands-on strategy and a willingness to stay informed about market dynamics. Ultimately, the decision to invest in the Vanguard S&P 500 Index Fund or to explore other strategies hinges on individual circumstances. For many, the simplicity and historical reliability of the index fund make it an appealing choice, especially for those new to investing or those who prefer a more passive approach. The beauty of this strategy lies in its accessibility. Anyone can start investing with a modest amount and gradually build their wealth over time. In a world filled with investment options, the Vanguard S&P 500 Index Fund shines as a solid foundation for long-term growth. It embodies a philosophy of patience and discipline, encouraging investors to focus on the long game rather than getting caught up in the short-term noise of the market. By dollar-cost averaging and reinvesting dividends, one can harness the power of compounding, allowing their investments to grow exponentially over the years. As one contemplates their investment journey, the S&P 500 Index Fund remains a compelling option, blending simplicity with the potential for significant returns, truly embodying the essence of smart, long-term investing.